Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the September sales of new cars, we update what is happening with term deposit rates, take a look at the latest income survey results, and we'll wrap up with what the other media are reporting. September sales of new cars were at their highest level since October a year ago and exceeded 7,000 for the first time this year. Clearly those high readings of consumer, business and employment confidence we've been seeing in the last week or so have translated into active spending on big ticket items by both consumers and businesses. Toyota had a very good month, selling more than 1,500 cars. Ford also did well in second place, reaching almost 1,000 cars sold. Third was Holden, but their volumes fell compared with previous months. It was also evident, however, that almost all luxury brands had a slow month. Sales of commercial vehicles were not as strong last month either, but were still at reasonably good levels and more than 8% ahead of the same month last year. The whole vehicle sales industry is seeing an uptrend in sales, with the annual rate of sales starting to grow again after a year of trending slightly lower. More rate increases are coming through for investors in term deposits and debentures. We've recently had notable rises from both Kiwibank and Raboplus. The Best Bank benchmark had been sitting with ANZ's one-year offer at 8.65%, but Kiwibank has now trumped that with a 5-month offer at 8.7%. It is also notable that 16 second-tier finance companies now offer debenture rates at or above 10%. A few first-tier finance companies are also in the high 9s as well. It is worth reviewing how far interest rates have risen in the past 5 years or so. In many cases, offer rates have nearly doubled. You can see from our rate curve chart the transition of New Zealand from a market that offered moderate rates, higher than many other developed countries but still about their long-run average levels, to the high interest environment we have today. Compared with other countries, funds sourced in New Zealand are high-yielding, high-cost. From an investor's point of view, high interest returns are not only relatively more attractive here and offer a good margin above inflation, they also set a relatively high benchmark for returns from mutual funds and share investments. Today, Statistics New Zealand released its annual income survey. This is a profile of how our incomes are made up, and it makes interesting reading. It focuses on incomes of all people aged 15 and over. The first thing that stands out in this survey is that if you have a university degree, you will likely be earning almost 3/4 more than someone in paid employment who only has a high school qualification. And that's a big jump up in the last year. People with a trade qualification earn about 1/4 more than those with only a high school qualification. In paid employment, on average, men earn 35% more than women. Across the country, you'll tend to earn most from wages or salaries when you're aged between 30 and 34. After that, wages and salary earnings tend to decline slightly. But income from an investment rises as you get older, as you would expect. By the time you reach 60, it makes up about 12% of the income of all people in this age group. When you reach 65 and above, it's monies received from the government that suddenly becomes significant. And the region to live in with the highest incomes? That's Wellington, shooting up to more than 20% above the national averages. And finally today, a quick wrap-up of some other recent news. The Reserve Bank of Australia yesterday left its cash rate target unchanged at 6.5%, which surprised no one. A technical glitch meant TSB customers using internet banking could see details of other people's accounts, which was most embarrassing. The NZX has threatened PIN securities with delisting unless they receive their annual report soon. The Reserve Bank reported a loss of $12 million on its currency intervention in June, but it has since turned that position around and into a profit. It's been revealed that Craig McDermott, the Aussie fast bowler and Brisbane property developer, not only owes Bridgecorp more than $22 million, he also owes St Lawrence more than $7 million. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.